All right. Hi, everyone. I'm Kayla Henry, and I'm a realtor in Bozeman, Montana.
I'm Kathy Zaleski. I'm also a realtor in Bozeman, Montana. Kayla and I both work for Realty One Group Peak. And our guest today is Emily Kennedy, who is a lender at Stockman Bank.
Yep.
Today, or in this video, we were going to talk a little bit about bridge loans.
And this specifically came up because we most recently did a home sale contingency video talking
yes,
about the complexities and intricacies of home sale contingencies from both a buyer and a seller standpoint. So we want to talk about bridge loans,
right. So,
or have Emily talk about them.
right. So, a bridge loan is an sorry, we'll let Emily talk
Yeah.
just a minute. A bridge loan is a way to avoid having to use a home sale contingency in your purchase. Okay. As Kayla often says, home sale contingency makes you both a weak seller and a weak buyer. So, in the fact that probably a large percentage of what we're going to see in the market in the next 6 to 18 months is going to involve home sale contingencies. We wanted to do this so that it would become known that there are ways, one of which might be a bridge loan, to avoid having to write an offer with a home sale contingency. So, Emily, what is a bridge loan?
So, a bridge loan is a loan you would get from a bank or credit union. It's an in-house loan, and what it does is it is one loan secured by both houses.
Okay.
And so it takes both as collateral. It puts a deed of trust on both houses.
So the one that you own and the one
that
you're
you're
purchasing.
buying. Yep.
Okay.
And so that loan is going to pay off whatever mortgage you have on your departing residence. So let's say that house, just for numbers, let's say that house is worth $800,000 and you owe 200 on it.
Okay.
You have 200,000 mortgage on there. And then you're wanting to buy a new house also for $800,000.
Okay.
And so we have this house over here. It's got a lot of equity in it. Once it sells, we're going to have quite a lot of money available to us at that point.
Right.
But we need to get into this new house and we want to avoid the home sale contingency and have a strong offer, have a competitive offer potentially. Yeah. And so you have a bridge loan. We've paid off the $200,000 mortgage over here on our departing residence. And we're also getting you however much you need to buy this new house for $800,000. And if that's the full eight, or if that's only $600,000 because you have some money of your own outside of your home sale that are able to put toward it. Let's say you had $200,000 of your own money that you were able to put into it. So we need $600,000 over here to buy the new house, and we had to pay off $200,000 over here. Does that all make sense so far?
Yes.
Okay.
Yeah.
So we need $800,000. Right. And we're secured by two houses that are both worth $800,000. So they're $1.6 million worth of real estate at that point. So we have $1.6 million worth of collateral and an $800,000 loan.
Right.
And so at that point, that's probably set up as a 12-month loan. Okay. And you have one loan for $800,000. It's secured by both houses, and it gets you the money you need to buy the house over here, the new house.
Right.
And you have your mortgage for $800,000. And maybe it has interest-only payments, maybe it has small payments attached to it. And so then you get into your house and you're excited about that. Your other house eventually sells and you clear
800,000.
Yes, you do. You clear the full 800,000. Right. And so then at that point, you're either paying off the new loan in full, or you're replenishing the $200,000 you brought to the table over here to get in the door, and paying off $600,000 of it and leaving a $200,000 mortgage at the end of it.
Okay.
And then someone like me comes in at the end to basically refinance whatever's left on that bridge loan, if there is any.
Right.
And at that point,
I will turn
it into a 30-year fixed rate mortgage.
Cool. Okay.
And so that sounds pretty slick. And if you're someone who eventually won't have a mortgage, if you have a lot of equity in your home and you really just
downsizing,
something
fully
like
paid off,
where that bridge loan is going to go away at the end of it, a bridge loan is a very great solution.
Okay.
Because you're really, you only need the interim mortgage.
Right.
Now, sometimes I'm a little critical of it if, in this scenario, we're talking about someone who has a lot of resources available to them, right? This is someone with a lot of equity in their first house. They've got a bunch of cash they were able to throw into the transaction. This is someone who's very well positioned.
Right.
And so they're likely going to be okay to carry an $800,000 mortgage for quite a while. But remember, they were someone that only had a $200,000 mortgage.
Right.
So this is a big loan
Yeah.
that they're potentially carrying for. It's set up as a 12-month deal to give them enough time to get their home sold. But when you start playing out the what ifs and whatever else, it is a higher risk product.
Okay.
Because basically everybody but you is having a great time with their transaction. The sellers get their house sold quick. The realtors get paid. I mean, like, and I'm not being critical. I'm just kind of pointing out, the person who's taking on this bridge loan, you're taking on $800,000 and 2 houses, and everybody else is done with the transaction. It's closed. You own it, and now it's your job to get it sold and get out from under this big loan with 2 houses.
Okay.
And so anytime I talk to anybody about darn near anything, we're going to talk about the kind of like worst case scenario with it. And we want to know when we go into it, everybody loves you getting that bridge loan during the transaction because they're getting their money without being tied up with your business, which is getting your home sold. But you're the one at the end who has a big loan to get rid of. Yeah. And so as long as you are kind of really aware of that and comfortable with what that looks like, then it can be a great solution to get you into that house that you're really trying to be competitive with in your offer.
Okay, and hold on. So like the 200. Okay, so in the scenario that she played out, like, so there was only 200,000 left on the mortgage of the first home. But then you put that $200,000 on the new home. I would have been like, hey, pay off the old home entirely, and then you don't have to worry about having 2 mortgages, and now you can go to the bank and say, but then they don't have a down payment, right? So okay, so it gets
never mind.
But you could take out a HELOC if you paid off that first home altogether. Now you're 100% equity on that $800,000. That is good as money is in the bank, except for it's not in the bank, and that's why you need to sell that house to buy another house. But okay, so but you can go get a HELOC. It's probably an easier loan, maybe even a lower interest rate. Maybe. I don't know. Anyway, but you could get a HELOC for the down payment on the next home.
Yep. And so with that, a HELOC is a home equity line of credit. Yes. It's pulling equity out of your house. And so it's leaving your mortgage that was over here to start with alone.
Right.
And, a lot of people, that was a very low interest rate loan. So they're just hanging out, and that's still a fixed rate, and it's just there. And then you're borrowing however much you need for your down payment, let's say 20% on a new house. You borrow that as a home equity loan, line of credit. Then you've got your mortgage, you've got your line of credit, and then you've got a new mortgage that you put 20% down on or so. And so some people would say, well, now I have 3 mortgages.
Yeah, like, is that less?
And it really depends on who you are.
Situation.
Because also in that situation, everybody gets paid and you have 3 mortgages to balance. And maybe that's more comfortable for you because your home doesn't end up selling. You are able to pay off the equity loan over time. You've still got your low interest rate on over here, and you turn it into a rental, worst case scenario, if you aren't able to turn it over.
Yeah.
In some ways, having the 3 loans gives you a little bit more options.
Right.
Where you could absolutely, worst case, turn around and sell your new house if you were in a pickle, or just pay off one of them, or carry all 3 and rent the other. In some ways, you're a little more flexible with multiple loans.
Mostly, and correct me if I'm wrong, but mostly what I'm understanding is because the timing of those loans is very long. They're traditionally, I'm going to say, 15 to 30-year notes versus that 1 year. And while 1 year is a long time, I would hope it doesn't take a year to sell a home. We can't control everything, and you just never know. Is that what I'm understanding? That mostly it's because of that time frame that might offer more flexibility to someone, or the ability to decide which property or which note they'd prefer to clear off should something go south with the whole plan of moving through the real estate.
I would say both.
Okay.
Definitely one is you could choose to pay off one.
Yep.
instead of just having one big loan hanging over your head. And then, yeah, absolutely, the time frame as well. You've got 12 months to deal with the big old loan hanging out. And so the other part of it then is you have your closing costs. You're going to pay all your closing costs to get your bridge loan.
Okay.
And it's a big loan, right? It's a big old 800. It's a big loan compared to really where your needs are.
Right.
And then you're going to pay your closing costs again for whatever loan you need from me at the end of it. If you do.
So fees are typically higher for a bridge loan.
Well, because you're doubling them.
Yep. Okay.
Yeah.
It's great to know.
And you do have some closing fees with an equity loan, but often they're less.
Okay.
Lesser.
Yep.
Yeah. It's often a percentage of your loan. And if you're just getting a little loan over here, then a big loan that's taking care of everything, you're paying.
So it seems to me that, like, even in the scenario that we're talking about with the 2 homes, $800,000, 200, blah, 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 all that, that is like the ideal candidate for a bridge loan because they have a ton of equity, but it still might not be the most cost effective thing to do. What is interesting, or I guess what is reality, is that phenomenal scenario is not what we're going to be talking about for, again, remember how I said like 90% of statistics are made up? So for like at least 70% made up of people that are using bridge loans, their scenario is not that good. And it is quite stressful to be having that giant loan that you have to do something about within 12 months.
Right.
That is...
These can be a tenuous situation.
Right. Yeah. These are not ideal, comfortable scenarios for anybody, even the really great equity person that we kind of just made up.
Yeah.
It's not awesome. Does it help you get into that next house?
Yeah.
Does it help you make the move? Yes. So if there are extenuating circumstances that are not, real estate market related, like, hey, we got to buy this home because my spouse died and my mother-in-law is moving in to help me take care of the kids. This is what's got to happen. Okay.
Yeah.
So there is a way to make it happen in that, if that's your scenario.
Yeah.
But is it ideal? No, but let's face it, you're already in a totally horrible situation. So can we try and make the situation a little bit better? Yes, there's a product out there to try and help you do that.
Yes.
Well, and again, mostly the whole point of this is to let people know what are the total options, right? Because I think it can be very... people can often assume that I have one option and it's this way.
Yeah.
And the whole point of a lot of these videos in general, and of course sitting down with Emily, who is a mortgage expert, loan expert for our area and just in general, really being able to kind of tease through what are the many options. And it can certainly feel overwhelming, but of course, just give us a call if you have questions specific to your certain circumstances, because then we can really help you formulate some different plans, because as you can see, there's a lot of them, right?
Well, and what's funny is a lot of times the bridge loan scenario comes up when somebody's like, well, we're going to have to like live in our camper for a month, or we're going to have to, when they feel like that is as uncomfortable as they would ever, like they just can't stand the thought of that they might be without a home because they sell their home first and then they're going to buy. Well, I'll tell you what, living in a camper is going to feel pretty good compared to having that $800,000 loan hanging over your head that you have to do something about in 12 months.
Yeah.
Or
you have to feel the pain.
Or taking $50,000 less than market value of your home because you just have to get it sold and there's buyers that are willing to pay for that. We just saw that situation play out in our office. That being said, the buyers of that home, they were the sellers, right? Took $50,000 less than what they thought their home was worth. They also got into a really great deal because everybody had this pinch to just get it done.
Mm-hmm.
So sometimes the stars can't align for, I'm going to say, the money to kind of just wash out, right? They lost $50,000, but they also got a great deal and maybe got $50,000 or $60,000 off the home they were buying. Doesn't always end up working out that way. So again, sometimes if you can avoid it, it's great. Also, if you need to use a home sale contingency and play with the unknown a little bit, we can do that.
Right.
Again, options.
I mean, and there's cost to everything, right? Like whether it's we lost $20,000 on our home sale,
stress,
or
time,
the amount of fees that would go into the bridge loan, the home equity line, and or then refinancing or getting a new mortgage at the end of the whole thing. I would imagine that, let's say we were talking about an $800,000 home, that might end up costing you $40,000. Like, I mean, the fees,
Yeah.
it's no joke. So it definitely, I think being able to game that out with an expert like Emily, is super important and definitely a consideration. So if you are in the position right now where you need to sell your home to buy a new one, go to the bank initially and find out what your options are. And is a bridge loan less painful than moving twice?
Yeah.
Right?
Mhm,
Moving your
mhm.
stuff into a storage unit and living in your camper and then moving out, or doing a short term 3-month rental and, furnished rental. If you can, that might be a great scenario, and it might ultimately cost you a whole lot less than some of this. And I think, Emily, like you said, these aren't necessarily the most ideal situations. There's products out there to help if that's the only way to resolve your situation.
Mhm.
But certainly there are all sorts of things that can be done. So.
Yeah.
Are there any other, besides, I'm going to say, the bridge loan and the HELOC, are there any other loan programs that you might recommend for somebody who's looking at buying and selling somewhat simultaneously?
The big thing that we also see is there are a lot of well qualified people around here who can, on paper, carry two mortgages. And so, sometimes people will come in and say, well, we need a bridge loan. And we find out we have other resources on hand to get the down payment.
So great.
And we also, from my end of things, you may not love it, but technically you qualify for both your mortgages.
Okay.
And we can take a loan from your 401k to cover your down payment. You're still ultimately like winding up with both houses, and you're not having to kind of have this like multi-step sort of pay off,
house of cards.
Like kind of, you're really just getting a new mortgage and then paying off whatever you have from your previous mortgage when the time comes. And sometimes people will come in with like this, like, we need this high-end strategy kind of thing. But sometimes it's just as simple as, you can just do this. Let's find the money for the down payment. I say you can afford it, and loan guidelines allow for it. Let's just do that. And then we're not having to kind of completely reinvent the wheel or take on this new risk situation. We just have what we have. It'll get paid off when the home sells.
Well, that's great. I mean,
and then it's just as easy as buying a new house.
Yeah. Cool.
Easy.
Imagine that.
Kayla and I can help you with that.
Well, and I think it is so true that so often, and again, realtors included, it's easy to get down these rabbit holes of these really complex, big things. And it's like, wait a second, let's, again, zoom out a little bit and see what is really truly possible from all levels. And sometimes if you need to drill down, we can absolutely do that. But I think that's a great thing to point out, Emily, that just, you might be able to qualify. It might feel a little uncomfortable or tight, but that might be the best situation for a couple months to help you make your next moves.
So one thing that came to mind while they're talking is like during the loan qualification process, from like when the loan application starts to when it's over, you've signed it. You are now the owner of $800,000 worth of debt. Sorry, funny, not it is, but okay, but.
She can laugh at anything.
I know, right? That is a stressful time. Like you have to be careful about how you're spending your money. If grandma gives you $5,000, what's that gonna do? And like, hey, let's not take out a new line of credit, or oh my God, my car broke and now I need a new car, and that's whatever. So my point in all that is that if you were to opt to do a bridge loan, and then you're gonna have to refi, and you're gonna have to do that, is a long period potentially where you're kind of under some financial rules, requirements,
limits,
kind of
limits.
Freeze.
You want to keep things
kind
tight,
right. So God forbid something happens that was unpredictable, that might create a different kind of credit situation. It's a little bit stressful. So if you can avoid it, and I think that's kind of what we're down to, if there's a way to avoid having to put yourself through that, let's try and do it. And it might involve some creativity, but talking with an expert and figuring out what scenario is best for you, because life is unpredictable. So the less risk you put yourself in for the shortest amount of time is generally ideal.
Yep. Another thing, one final, I guess, parting comment on it is the other thing to know is that when you get a mortgage, you don't immediately have a mortgage payment.
Oh, yes.
And so it's
I
like,
love that. I
right?
forget that, but yes.
So like when I'm talking to some, like right now it's mid-April and getting
End
to
of
the end
April.
of April. Yeah. So we're getting to the middle of April. Let's say I have somebody right now we're having this exact conversation in my office and we're trying to explore our options. Let's say they're really wanting to move forward on something and they're going to make an offer to close middle of June, about 6 weeks or so from now.
So pretty standard contract, maybe a
Ish.
little long, but
Long-ish, but let's even say the first week of June.
Sure.
June 5th. I don't know what day of the week that is, but let's say that worked. So they're not going to have a mortgage payment on July 1st. They're going to have a mortgage payment on August 1st.
See, I told you.
And so
almost 2 months.
anytime in the month of
Wow.
June, their first payment won't be July 1st.
Yeah.
It's going to be August 1st. So here we are way back in April. And we're talking about whether or not we need to sell our house, whether or not how we're going to set it up. Do we need a bridge loan?
Yep.
What do we need? How are we going to do this? We just bought ourselves May, June, and July
And that's
before we have
huge.
one mortgage payment.
Yeah.
And so maybe the conversation is, okay, here's how much the mortgage payment is going to be. It'll be $4,000 a month when the time comes out in August. Maybe we build that into our plan. We put $4,000 less down. And all of a sudden, we have a game plan that got us all the way to September without actually being doubled up on any of these mortgage payments. And we're feeling kind of okay about that. Now, all of a sudden, we have until fall to get our house sold without actually ever being truly
Find your
doubled
professionals.
Yeah. And that's where we don't want to close at the end of May. We want to close the first week of June. Why? Because we just bought ourselves a month worth of mortgage payment to avoid.
Right.
Then we
I
have
gotta make a phone call.
I was just talking about that with one of our buyers the other day. I'm like, oh no, I don't think they're gonna have to make a payment until July.
Or there's maybe a way we can again structure it strategically, structuring it with
it's
some
even just a few more days on the calendar, and all of a sudden it's completely different.
Well, right, like a closing April 28th versus May 3rd can get you, that's 5 days. It can get you an entire extra month without a payment. And you're only talking about moving the close date by 5 days.
Yeah, May 28th to June 3rd. Something like that.
Yeah.
Yep.
Yeah. Amazing. So
Emily,
thank you.
I mean,
did I say April to June?
Yeah.
Whoops.
We knew what you meant.
Know what I meant.
We all did. Yeah.
Whoops. Yes. Go ahead, Kayla. Sorry.
That was it. I just I think you said that was what we wanted to talk about was the many options that are out there, which seems to be a reoccurring theme for these videos.
Yeah.
But it's so true. There's so many different options for your home sale and or purchase. And again, really having partners in it that you trust and work well together and who are local experts, right? Yep. That makes such a huge difference. If hopefully that's become abundantly clear, but
yeah. Well, again, thank you, Emily, for joining us. We're very grateful. And I'm sure all of our viewership, all 17 of you, are really grateful for Emily's contribution as well. So please don't hesitate to ask any questions that you might have in the comment section. Please subscribe and like. We definitely will be coming up with more videos, loan related.
And we'll put Emily's contact info, of course, in the description below.
Yeah,
reach out to her with questions.
Thanks again for watching.
Thanks.
Have a great day.